It is hot outside and even hotter on Wall Street. Not one, not two, but all three of the major indexes we follow for you here on NBR closed at records today, something that hadn't happened simultaneously since 1999. Back then, technology played a big role in driving the markets. Today, it was a combination of factors that boosted investor sentiment. Higher oil prices, strong earnings from department stores, and positive news on the jobs market. Let's get right to those record-breaking numbers. The Dow Jones Industrial Average added 117 points to a record 18,613. NASDAQ up 23 to a record 5228, and the S&P 500, I'll say it again, gaining 10, a record 2185. As for domestic crude, it settled up more than 4% on comments from the Saudi oil minister about possible action to stabilize prices. Bob Pisani at the New York Stock Exchange has more now on what drove stocks to historic highs today.
How did we get to new record highs? We did it the old-fashioned way. We rotated into it. For most of the year, investors chased anything that paid a dividend, telecom and utilities and consumer staples and REITs. But since the start of the third quarter, there's been a rotation. These names are now out of favor. Tech has been the new leadership due to stellar earnings from the likes of Microsoft and others. But the rally has been even broader than just technology. For example, big global industrial names like Illinois Tool Works, United Technologies, Dover, and Eaton have powered to new highs in the last 6 weeks. And in the last couple of weeks, energy stocks have become a new leadership group as oil stopped its slide and has stabilized around $42. Now, for everybody wondering why we keep holding up, there's several reasons. First, the U.S. economy, while choppy, is still among the best in the world. We also see second half earnings that are relatively stable. Next, crude oil, which gave everyone a scare a week ago, is stable around $42. Third, there's a lot more talk of fiscal stimulus, not just monetary stimulus, in Japan, the UK, Europe, even the US. Finally, it's a cliche, but Tina, there is no alternative to stocks, is a very real phenomenon. There's no yield in bonds, there's no gains in cash. All this means stay in stocks. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.